When you think about what is going to be the catalyst from here, are we entering into a post-Fed world?
We are entering into a post-Fed world, and that could very well be one of, if not the only, catalyst to move stocks higher. I certainly think there is going to be a period of digestion. We can't have the kind of gains we had without some kind of period of digestion, especially given the what I would call a mediocre earnings season. And so I think what is likely to drive stocks higher is the end of the Fed rate hikes, but that means markets have to realize that it's the end. I think we've already hit the end, but that has to be communicated by the Fed, and that will take a little time. But also, markets have to start discounting an economic recovery next year. And I think that will happen, and so that means that smaller cap and cyclical stocks will likely lead the next rally.
Well, to your point that the rate hike cycle needs to end, it feels like we've tried to price it in a number of times, only for the Fed to come out and say, we're not done yet, actually. There's still work to do. How big of a risk do you think that is at this point in the economy?
Well, I think we know we're at the end of the line, right? But the risk is that if the Fed is spooked, if it worries more about inflation, if the ghost of Paul Volcker hangs heavy, and the Fed decides to keep hiking rates, to be sure, I think that's a real problem because we have a very significant policy lag. And so we don't know if an enormous amount of damage has already been done because it hasn't necessarily turned up in the data. Typically, the rule of thumb is 12 to 18 months between policy implementation and the actual results showing up in the economy. So we don't know.